all of these trades that you're seeing on the screen right now have been fully documented and also been trading live on my second channel. Now, if you want to expose somebody, then this is the way to do it. You go on their YouTube channel and you check their trades out for yourself. Now, the craziest part about all of this isn't even that I made 10K last month, but the fact that this guy has put in the work to learn what I'm teaching and has gotten his first payout after years of failure. This just goes to show how fast results are indeed possible, but only, and don't be fooled, if you're putting in the right effort and if you're looking out for the right information to get it from. So you need a proven framework, a proven system, and only that way you can expect to get the right results, unlike what you have been doing so far, which led you to unprofitability. My strategy is by far the easiest way to get profitable fast. Now, what am I even looking out for? So in a nutshell, it is very simple. You're going to go into the 50-minute time frame and you want to look out for the most extreme ranges. In that case, that is going to be that high and also that low. Now, you don't want to do something like this where you're going to look for ages of months of worth of price action. You only want to look out for what has recently happened, which is going to be these two swing points. It's also not going to be something internally. It has to be the extreme points. Now that we have identified that, I am dropping down onto the 1-minute time frame, and in here I'm looking for a fractal shift. This is not the same thing that you have seen so far from ICT whatsoever, that there's a market structure shift, because I need to see internal liquidity has been taken out, and then ideally I want to see that another time. This could be paired with relative equal lows, for example. Let's just say we have a liquidity point, we're falling back into it, and I'm identifying that I want to trade onto the upside, right? So this is going to be your entire daily bias for that matter, but it's only going to be applied on a 50-minute time frame. From that point on, I'm taking the trade after we had the first fractal shift, and from this point on, I'm just taking the trade onto the upside. Now, but you need to understand the nuances before you can fully trade it, because what I've just explained to you is just oversimplified. Now, what do I mean about having a shift internally? Let's mark it out like this. So we have this entire price action. We still have our most extreme high and our most extreme low, but internally what is going to happen is that you're going to have a lot of liquidity points being taken out. Now, how do you even identify to begin with that we're going to be trading onto the upside and not to the downside? Well, this could be anything. This is going to be relative equal highs that sit above here. This is going to be an FEG or a BPR. This can be a lot of different things. We are just going to get into it. So as you can see, we have traded lower one more time, second time, and a third time, and by this point on, you are allowed taking a trade onto the upside. But we're also not just taking any liquidity point, okay? Because you're going to miss a lot of trades or lose a lot of trades if you're just going to trade this randomly. So just keep that in mind. From this point on, I need to see strong movement, you know, not just something like this, not something like this where we are hovering around. It needs to be strong movement, taking out the initial high that has been created internally that ran the previous low, and from this point on, I'm entering. Either I'm going to be entering with a market order or some kind of FEG that is going to be falling back into here, and I'm going to be shooting most of the times for the take profit, not even for the most extreme 50-minute high, because this is what you would have been doing and it's going to lose you a lot of trades. I'm more specifically going to go for something internally. My risk to reward is quite high already. Since we're going for positive risk to reward, I'm going for 2.5 trades on every single trade, most of the times at least. So it's not worth it going for the most extreme point. Although I also teach that in the one-on-one mentorship, but that's more advanced. Now, the problem with what I have previously seen with a lot of different strategies when they are just trading your regular market structure shift is that you basically have from this point on two options. So let's just say we're at this moment in time, we have taken out liquidity, and then from here on, we expect this high to be taken out. A lot of the different times, you basically have two scenarios. Either the trade is just going to run lower and you're going to get out with a stop loss if you have entered it something like this, or the other scenario is going to be after you have basically taken the trade, you are actually going to go for internal highs such as this one, but at this point on, you're still just going to go lower. And yes, you could have said that you're just going to get out at a break even, but come on, we want to get out at a win. So the break even trades are not as significant as having a winning trade for that matter. So in this case, you don't even take a trade if that exact scenario doesn't occur that I'm about to show you. So here's going to be a very classic example, and I've taken that exact same trade, and I'm going to actually prove it to you in just a second. So when you're looking at this price action, where's going to be the most extreme point on a 50-minute time frame? If you would have said that it's going to be this high and maybe this low, then you are not really right on that. It's going to be that high and it's also going to be that low. Remember guys, I've told you it has to be internally, not something else that has happened previously, okay? From this point on, what else can we observe? Okay, we have traded into this entire FEG one time, second time, perhaps we're going to trade into it a third time. But first of all, we want to identify, are we going for that high or for that low? This is basically going to be your daily bias, but just in a summarized way. For that, you can go on to the full hour or even the daily time frame. And here it is quite obvious to say, if you have basically seen all of the other videos that I've done on this channel so far, then you know we are going to go for that high. Why is that? Well, because we have already been trading on to the upside, so we might as well just trade higher. And this actually goes a step deeper. 80%, or if you want it to be exact, because I've actually calculated it out through extensive amounts of data, 86% of the time we are either going to go for the candle high or for the candle low. In 14% of those times we're going to go neither for the high and neither for the low, or we're going for both the high and the low, if you get what I'm saying. Now, since the chance is 86% that we're probably going to go for the high or the low, I'm going to bet for the high, of course, because we are already trading on to the upside very logically, guys. From this point on, we basically bet that we're going to go for that high, not for that low. Okay, now we drop down onto the 1 minute time frame. Just what I've shown you in a nutshell previously. What you can spot also, we have a ton of liquidity building up. This can be your trendline liquidity, but I don't even see it as that because my bias is onto the upside. From here, I want to see fractal movement. So we're looking out for this low. This has to be taken out. After this has happened, now we have traded into this entire FEG. Okay, from this point on, what do I want to see? Strong movement onto the upside that is clearly showing, okay, now it is the time to go onto the upside. We basically have 3 confirmation points. We have the 50-minute one that we want to trade higher. We have the low that is not going to be traded into. That's going to be number 2. And the third one is going to be, we are trading into this FEG. And actually there's a fourth one, because now we need our confirmation candle that's heavily trading onto the upside. From this point on, we're just going to be skipping the candles. We're not taking trades, no trades. Even if we're trading lower, we're not going to be panicking. No trade, no trade, no trade. It has to break internally of these highs. So still no trade, no trade, no trade, no trade. Okay, from this point on, what can we observe? We have an entire candle breaking through that entire structure. You see, we have not breaking out all of these highs previously, but now we did. And as you can see, this is clear movement onto the upside. From this point on, it's obvious we are just going to trade higher. Now, why was previously not the right time to take a trade? If you're going to be noticing, all of these candles that you have in here have not broken through that entire high, because this is right now our initial extreme points, this low and this high. We have not broken out of it. This is just, you know, silly willy. We're taking it out with a couple of weeks. This doesn't count. We need to see strong intent. This candle though has shown us exactly we are now trading onto the upside. Okay, from this point on, we're basically just taking a trade onto the upside, and I like to put my entire stop loss below the candle low that has initially been created. It's not going to be this low. Why? Because it's just way too close. We need to take out something that is going to give us a little bit of room to breathe. From this point on, you can either target some internally. In this case, you can even go for the 15-minute time frame. But since the bias is already bullish, I am just willing to extend this all the way for 142. And this is exactly what I have done, and I'm going to show you in just a bit how this worked out. So as you can see, this was a take profit hit, and I'm telling you, it can't be more simple than this. I have taken this exact same trade. Let me maximize this. Now, in the case where you're saying, okay, why are you sending in a screenshot after the trade has already played out? No problem. Go to my second channel, check this video out, and you'll see I've actually taken this trade live. But not only in this example, if you go to every one of my trades, all of them follow the simple systematic approach. It is nothing complicated because it's just the same stuff over and over again. If you do the same stuff over and over again, then you're also going to get the same results over and over again. This is just how it works. So if you were doing ABC yesterday, but today you're doing XYZ, well, then the entire results are basically just mixed up. But if you're doing XYZ every single day, then you're also going to get XYZ results every single day. You know, the list goes on. You get my point. Now, just as a general thing, if we're going to look at this, for me, it is very important that if I'm wrong of the trade, then I need to know that very soon. And there's a clear reason for that. When we are having a trade, and I've just shown it to you, we like to look out for the most extreme points and something internally. Okay, let's mark that out. It is a very simple pattern. If I'm wrong onto the trade, and let's just say that I want to trade onto the upside, then I want to be wrong very fast. And there's a couple of different reasons for that. Now, when I'm right, then I'm right very fast. The market will tell you within a few minutes, okay, you are right or you are wrong. But also the same goes for the opposite way. When I'm wrong, I want to be wrong fast. The reason for that is because I have 2 options after I've taken a loss, which has basically taken me 3 minutes. Either I'm going to say, fuck it, I'm going to close TradingView and I'm going to move on with my day because I know that tomorrow I'll just make all of that money back anyways. Or let me just patiently wait for the next opportunity and let me re-enter the trade. Because if you're looking out for a system that just has multiple hours on end that you have to monitor the trades, well then at this point, the system doesn't even have to be very bad, but you are failing the system because you don't want to look at the charts the entire day. That's not why we have started trading to begin with. We started trading because we wanted to have the max amount of money for the least amount possible time that we have spent on it. But another thing on how you're going to always know whether or not you're right or you should take a trade or not, because a lot of traders, they're just hesitant. They don't know when they're supposed to be taking a trade, and when it's time to take a trade, they're just hesitating. So there's clear reasons. Let's just say that you're looking out to trade onto the upside, so for this 50-minute extreme point, but the price action runs lower into the 50-minute candle low. Well, in this case, your bias was wrong, so you stop trading that day. This simple rule is going to avoid so many losses. Now, but all of this also has a little bit of a trade-off. Since I'm waiting for a fractal shift on the 1 minute time frame, I'm also going to be losing out a couple of trades. So let's just say that with this entire candle trading onto the upside, you're probably not going to be finding an entire entry anywhere within this big movement because the move is already over. But in reality, it is worth the trade-off because you're making more money. Basically, you're doing less for more. So in these cases, I will always take the trade-off. Now, but if you're trading this at a random time, then it's not going to be working out. I'm going to be honest with you. So before you're going to be scratching your head and thinking, oh, well, you know, this is not working. StarTrading has told me that I should do XYZ, but it's not working. Well, it's because you're not trading this at a specific time. We firstly have to understand my time theory. And at this point, it's not even a theory, but based off thousands of trades that I have backtested and collected the data. It might look complicated, but it's actually way more simple than you think. If the 1 hour candle has just opened and you're past 7 minutes after the 1 hour candle open, then you have a 90% chance that the trade is just going to rip through your take profit if you're right on the trade. Now, if 24 minutes have passed, then you have a 24% chance that if you're right once again, the trade is just going to rip through your take profit. Now, and here's where it gets interesting. If you are 45 minutes after the candle open, then you have a 71% chance that it is just going to rip through your take profit. I'm specifically saying rip through your take profit because it's just going to completely overshoot it and annihilate it most of the times. Now, I have backtested over 1,000 trades. This is not just random data, and it just goes to show how it's very important. So when you're looking at all of this, I want to ask you a simple question. What does it tell you? Now, the answer to that is very simple. It tells us the longer we are waiting, the more likely it becomes that the trade is going to play out. So if we're going to translate this in a price action sort of matter, we're going to look at the trades. Where have I taken this entire trade and what time do I like to look out for the trades, basically? It is going to be always at 8:30. You see, this is not a random time. You've probably also seen it at some point or the other, but I always like to trade the strategy at 8:30. I'm not even considering any kind of trades before 8:30. Well, we have just discussed it. If we're just going to wait 15 minutes after 8:30, well, then we already have a 71% chance that this is just going to rip through our take profit. And this is exactly what has happened. If you're going to look at the time at the bottom, the trade has been running into a take profit exactly between that specific time period, because that's just going to have the most likelihood of it actually playing out. Now, remember what I've told you previously, and actually let's just review one of my trades that I've taken previously. Now, you see this entire price action on the 4 hour time frame. If we're in this little bit of price action, this is going to look something like this on the 4 hour time frame. Okay, now in here you want to ask yourself, because the next 4 hour candle is about to open, you want to ask yourself, are we going for the high or for the low? It's the same principle as we have just done 5 minutes ago on the daily time frame. So obviously probably we're going to go for the candle high and not for the low, because we're already close onto it. So it's just an entire rabbit hole that just keeps on repeating. If you just understand it once, you will never be able to oversee it ever again. So here's going to be another example, also a trade that I've actually taken and also journaled. When you're looking at this price action, we're currently on the 50-minute time frame. Where are we more likely to go? We're going to be marking out our most extreme 15 highs and 15 lows. And this point is going to be that high and also that low. Now, as a question to you, which of these is going to be taken out more likely? Probably the previous candle highs. Well, because we already have a lot of liquidity in here based off the relative equal highs. This low is also pretty far away. Why should the price all the way move lower just to take out that low? It just doesn't make sense to me. So obviously we're just going to be trading onto the upside. From this point on, we want to go into the 1 minute time frame. We want to follow each and every single step. We want to ask ourselves, okay, are we at 8:30? Yes, we are. From this point on, we're waiting for what? A shift that has internally been happening. As you can see, we have these lows, and all of them, at least one of them, has to be taken out until we're going to be taking a trade onto the upside. Okay, from here we have taken out these lows. These also count as relative equal lows if you want it like that. From this point on, we have strong movement onto the upside, and you see it doesn't even have to be initially taking out that entire high. This is not necessary to happen. Why? Because we're already showing strong intent onto the upside. From this point on, I'm literally just going to be taking a trade. Now, you can either extend this all the way higher for something that has previously been happening, some kind of high that you can be looking out for, but I usually just like to keep it very simple. I'm going to be putting my stop loss below that candle low in this case. From here, I'm just going to be letting it run. Now, there's going to be clear reasons on when you're going to be setting your trade at a break even. See, this is the thing. Most of you would have set their stop loss at break even once this high has been taken out. But this is wrong to do. You are not trading based off structure. You're just looking out for the most safest high that has to be taken out, so you're not going to be losing a trade. That's unprofessional. You're going to be waiting out until you have strong movement onto the upside once again. And this is mostly also going to depend on whether or not your target is higher onto the upside. See, we have taken out basically that high. What would be the reason for you why now is the right time to set your stop loss at break even? Look at the price action. We're having an FEG in here, so there's still potential to trade lower. From this point on, once we have basically taken out that high, now I'm putting my stop loss to break even. In that case, if I'm going to put my stop loss at break even in this moment in time, this would have been close, but close is still enough for us to the TP in that sense. So it doesn't matter if it's close or not close, we just want to make money in here, okay? That's all what we really care about. From this point on, the trade is just going to run into a take profit. This is what I've been doing literally every single day on my second channel and also on my main channel. If you want, you can check it out. So just to remind you once again, you're looking out on a 15-minute time frame for your most extreme swing highs and lows. Then you're going to be asking yourself, okay, am I at the right time? Which is going to be 8:30, but this is also tied to, okay, are we trading for the previous candle high or for the previous candle low? This is either going to be on the 4-hour time frame or the 1-hour time frame. After that, you're going to be waiting for a fractal shift on the 1-minute time frame. And after that, you're going to be waiting for the outcome. Stop loss, take profit, break even. From this point on, you can basically just say, fuck it, I'm going to close trading you because I want to move on with my day. That's after all why I've gotten to be a trader to begin with. Or you're just going to be waiting for another trade opportunity. And from this point, you're going to be repeating that whole process over and over again. Now, if you're interested, I'm going to mentor you one-on-one until you're profitable, until you firstly have you made entire entry fee back of the entire mentorship and also have gotten your very first payout. Until these two things hasn't been happening, I'm going to mentor you from A all the way to Z. And even after that, of course, I'm not just going to be disappearing. I'm going to be always open for you to answer questions. On top of that, we're going to be doing a live trading sessions. My student that I've shown you at the very beginning of the video has made significant gains already simply because he was live trading with me. Obviously, he's going to be profitable with that shit because he's trading the same stuff that I'm trading. Now, the journey of my student Akame is actually quite interesting. He has seen my entire payout, and then after that, couple days later, he have joined the mentorship, and he said, mark my words, I'll be there as well. I don't know, I think it was like 1 or 2 weeks later, and he's coming up with one payout and then another one. Stop guessing, start trading based off real data that actually works.